Hello again, my friend. This is Rob Smith of the In the Black Quant Edge VTF here at T3 Live, and this is the Quant Edge 4-week coaching program. We're on week 4, where we're going to get to execution and risk management. As you once again read over the disclaimer, we've gone through the 3 universal truths, and as we've had discussions during the week, I was very adamant about saying we're not going to get to execution until you can understand those 3 fully. And if you need to go back as many times as you want. Because, as I said when we got to the broadening formations, that if you only think in terms of the actionable signals and time frame continuity, you're doing yourself a big disservice, because we have to be able to gauge the magnitude, and that's where the broadening formations come in. It also helps you to stop thinking linearly. When you're just thinking straight across, that's all you're seeing is time and the actionable signals. But when you get to the broadening formations, that shows us where we can start to gauge the magnitude and why we can expect the moves that we do. So, for this week, table of contents. Got to have a trade checklist. We're going to talk about the execution of the actionable signals. There's also some additional actionable signals I want to show you. The risk management of open positions, once we have something going, what we're going to do with it. Then, of course, the secret weapons, trading the VIX ETNs. And then as we get into the final part of live charts, I want to get into the sequence of when we are looking for certain things to happen over the course of the month. And we'll use this month as an example because there are certain known events and sequences of negation or continuation that we're going to look for at any given time. So we'll get to that. First, section 1, the trade checklist. All right. Before we take any trade, all right, we want to evaluate what you know to be true using the following checklist. All right. So instead of just jumping in there, I know for anybody who listens to me during the day who has not taken this course, who has not taken the time, you will hear me speak rapidly about a lot of things. And you can get excited. We know that trading can be psychological, but you need to go through the checklist to know whether we want to take these trades or not. Oftentimes you'll hear me speaking, I'm trying to figure out what's going on in the market. I'm not speaking in fallacies, but on an opening I can be very exciting, and sometimes people feel like they want to jump in there without doing the work. So let's take a look at the trade checklist. All right. So the first thing we want to know is how many actionable signals do we have for this trade, and what are they? Right? Because oftentimes when people are new and they hear me say inside 15 and they see an inside 15-minute bar, they're just going to jump right on it. First of all, when you pull up, all right, and you pull up your 4 charts, your monthly, weekly, daily, 60-minute at least, and oftentimes less than that, how many actionable signals do we have? Right? Do we have any? Right? Do we have 1? Do we have 2? And then as we get to the intraday, do we have 3? All that matters. So how many actionable signals do you see? And that's why when you go through the actionable signal portion of the course, and I want you to go back, I expect you to be able to see this like that. Right? When you look at 4 or 6 charts, you should be able to see the actionable signals like that. They should jump out at you. Okay? Now, once again, what actionable signals will be created if this trade works? Or if it does not. And so the reason that's important is if we want to be able to have the ability to add to our positions. Therefore, if this works, does it create something? Does it create, does a day inside day and up going to finish off and create a weekly rev strat? Right? What will be created if this works? Or if it does not? Right? Am I stepping into the potential of a more powerful signal against me where I'd be holding back? For instance, an inside 60 to the upside that was the only thing that was in control, where it's battling the weekly, monthly, and daily. At that point, if it doesn't work, at that point, we will create the rev strat to the downside with full time frame continuity. All right, so we always want to be aware of what will this action create. Will it give me something further, or would it put me deeper into a hole should I ignore the rules? All right, is the trade in the direction of participation group control based on time frame continuity, right? And just like I was saying, are you battling? Now there are times when you can take that 60 to counter. You just have to know what you're up against, right? We'll have broadening formation magnitude, and does it have the possibility of changing that? But we want to know when you're taking the trade, how much control is there? Is there full time frame continuity? Is it the 60 daily? Are you trading in control? Is this a momentum trade or a retracement trade? And that also adheres back to broadening formations. Am I going into recent highs, right? Am I going into recent lows? Or is this actionable signal counter is coming off a different colored candle, as we've talked before? An inside bar coming off of a red bar and going back up, retracement because we know it's come down. Inside bar going up off of a green bar, we know that's momentum because it's going up sideways and towards the highs. How much time will this trade have until the exhaustion of the actionable signals and time frame continuity? So, are we taking a weekly signal at the late on a Friday? How much time do we have on that? Are we taking a 60-minute signal with 5 minutes to go, closer to exhaustion? Or preferably, are we going to take it when if it triggers early enough on an hourly to have 55 minutes to go? All of this matters because we want to be able to add to our position. We also know that once there's an exhaustion of a signal, that signal is gone. Therefore, at that point, we would have no actionable signal if we're only trading on one, or if one or more are about to expire. So we want to know how much time we have until the exhaustion of the actionable signals that we're using, right, and the time frame continuity control. Where's my stop for this trade? Where am I going to get out? How are we managing this? And so when you are with me on the VTF and you hear me speaking with people, they will say, Rob, what is my level of defense? Right? And that is where we're going to put our stop based on what we know to be true of the things that we're discussing. Exhaustion, how many actionable signals? Where are we in the broadening formation series? What is my level of defense? Is it high? Is it low? And where does it go? But we always have an out. How will I manage my risk by adding, reducing, or exiting this trade? All right. So we want to be able to add. There can be times where we can reduce, and I'll get to that and how we would do that, and then times to get out completely and why. Does the criteria for this trade line up with the conditions correlated with the broader averages or each sector ETFs? Is the stock we're trading in the S&P 500? Is it in QQQ? Is it Dow Jones Diamonds? Do we have additional signals generated there to give us a tailwind? Or is it our stock in a sector ETF as well? And how is it lining up with those? Right. So we want to use one of the reasons we prefer to trade equities is because of this reason. We have more evidence when we trade equities because we can break down what is happening in the broader averages, what is happening in the sector ETF, and then what is happening to a stock that is in a sector ETF that's also in the broader average. So we want to understand how is all this lining up. Section 2. And if I didn't state that before in all this checklist, we want to know where the broadening formation series is, and that's where it comes down to retracement and momentum. We want to know where the broadening formation series is. Are we coming off any higher highs or lower lows, reclaiming, as I talked about in the broadening formation series? We want to know that as well. So section 2 is execution of the actionable signals. Make sure we know what we're going to do here. Since everyone has different risk parameters, time frame horizons, and account sizes, trading strategies based on the universal truths vary and are thus customized to the individual. But most importantly, what we want to know to create winning positions and then manage from there. And so, when you listen to me on the VTF and I'm conversing with the community, you will see that I have a pretty good idea of what most people do and what they are comfortable with. Once we work together, and we'll have the one-on-one sessions, once we work together, right? I know what you can handle. I know what you can't. I know what you're used to doing, right? And we're going to eliminate anything that doesn't work. But not everybody's going to day trade 1 minute and 3 minute, 5 minutes. I know that. Some people are trying to create a longer term portfolio. Some people are going to be more active than each other, and all that stuff's going to matter when we customize what we're doing. Most importantly, though, we use what we know to create winning positions and then manage from there. Period. We are not taking losers. We are not holding losers. What we're doing is we're creating winning positions, right? And then we just differentiate on how we're going to manage that. Ideally, you want to have a combination of signals, but you can also indicate the individual signals themselves. You can do that. Also known as the strat. And so when we talk about the strategies of execution, often I'll just abbreviate it as the strat. We're trading the strat. All right? And the strat is not taking losers. All right? We're going to get out of them fast. We're not going to hold on to those things. All right? But I can't stress this enough. We are always looking for combinations of these. All right? So when we go through these, remember, these are the individuals. We want to look for them in combinations across several time frames. With the regular hammer, right? What we want to do is take the offer as soon as the price is above the high of the hammer, right? So here's your hammer. As soon as that offer is above that, we're going to take that offer, right? We are always throwing the first punch. We place the stop 1 cent below the bar that triggers the hammer, right? So if it opens within the body of the hammer and starts going, we're going to take it there and we're going to put the stop 1 cent below. That should not come in. That bar should not reverse, right? Based on the time frame of the hammer we are trading. Now, once again, we can tighten that up by using a combination, but in general, placing a stop below the hammer's low is way too low. No, it'll have already failed way before then. So we're going to look to take that offer as soon as it takes that hammer, stop under the bar that takes it, and depending on the time frame, we can even tighten that up. Right, if we have an inside bar or what have you that's tighter, depending on if you're taking a monthly hammer or what we might be doing, we can still tighten that up. But based on just the hammer, that's how we're going to trade it. We want this thing to go. Similarly, execution of the regular shooting star, we're going to sell as soon as the bid price is below the shooting star. So as soon as the price breaks here, we're going to hit the bid. All right. The reason we do this, where some people are like, don't we want to offer it to try and get a higher price? That allows the other team to take a shot at you first. We are throwing the first punch. We want to see how strong they are. That's what we're doing. We expect when we hit the bid right below here, it's going to fall apart. We're going to trigger all these guys to be wrong. Right? We're not going to sit there and say, oh, maybe we can offer it higher. We are throwing the first punch. And we are also using a very tight risk management. We want this to just go. We're going to place a stop 1 cent above the bar that triggers the shooting star based on the time frame of the shooting star we are trading. Because placing a stop above here is insane. Way too much risk. All right? As soon as it breaks that, as soon as that bid is below that, we're going to hit it. The momentum hammer. Just like the regular hammer, we're going to buy above as soon as it takes above that hammer, as soon as it takes it out. However, unlike the regular hammer, the momentum hammer should trigger immediately. Right? There should be no messing around, right? Because of what we are expecting on this. If this is going to work truly, this retracement here is ill-timed shorts and profit taking. Stops are up here, and this is a combination of aggressive buyers with stops going off. Right? So the stop goes 1 cent below the bid after we take the offer. We're not going to mess around on these. These should just go. And when you see them work, you'll see what I'm talking about. They go immediately because we are identifying an immediate jamming of the short side with aggressive buyers on the buy side. Momentum shooting star. Just like the regular shooting star, sell as soon as the bid price is below the shooting star. You hit it. Right? Unlike the regular shooting star, once again, the momentum shooting star should just go. Bam. Right? So we're not going to give it any more room. That goes. We're 1 cent, stop goes 1 cent above the offer after we hit the bid. The bullish inside bar breakout to the upside. Bullish buy at the offer as soon as the price is above the inside bar. Right here is the inside bar. As soon as that offer is above that, you're going to take it. All right. Once again, you can place stop 1 cent below the bar that breaks it. Right here, right below here. Should just go. I mean, should go from here, but it's not as momentum. It's not as powerful as the momentum, so it might slowly drift up in here. But we can give it to here, based on how much time frame continuity we have, right? But these are just the basic rules, and we'll get through more of that. Basic rules on how we want to approach this. Bearish inside bar breakout to the downside here. Sell as soon as the bid price is below the low of the inside bar. As soon as that bid's below, hit it. Stop's going to go above the high, that 1 cent above the high that breaks it right here. This is the bar that breaks it. Here's where we hit it. There's where the stop goes. Much like the momentum hammers and shooting stars that you're seeing, rev strats should trigger immediately. They should go right away, all right? Because what you're witnessing is a greater force meeting a force, which means there's been an attempt to take the equilibrium and it is being thwarted. Therefore, when the opposing force comes in, they don't mess around, right? They're coming in to take the other side out. Therefore, it should just go. The bullish 2-bar rev strat. Buy as soon as the offer is 1 cent above the hammer here, right? One stop 1 cent below the bid as soon as we take the offer. This should just go. They've attempted to try and take this thing to the downside in your face, right? This should just go. And preferably to try and trigger all this. 1, 2, 3, right? But it should just go. When somebody punches you in the face, right? And it doesn't hurt, and you're going to pound them into the ground, that's what it's going to look like. That's what it looks like in chart form. Should just go. The bearish 2-bar rev strat. Sell as soon as the bid is 1 cent below the shooting star. In this case, here was your inside bar. Attempted that. Thwarted. Boom. Hit the bid as soon as it breaks that. Stop goes 1 cent above the bar that broke it. I'm sorry, above the offer once we hit it here. Be very clear about that. The bullish and bearish kicking patterns. Although the kicking pattern can be very powerful, additional actionable signals are needed to trade it because we have to have an out. Because when we see something, well, let's get through here. You can take any actionable signal at any intraday time frame, anything. Right, when these things are enforced because they're that powerful. Based on the execution rules previously discussed, as long as the price is above the opening price of the day for the bullish pattern and below the opening price for the bearish pattern. Because these are so powerful, when they work, you can look for anything, right? So far as it triggers, all you really need is 2. But we need to have that second one because we need to have an out, right? Because even if that triggers up into here on the bullish one, we're not going to wait for that thing to turn red. This thing should just go. These things are really burying them. Similarly here. So long as it's above here, you can look for anything. So long as it's below here, you can look for anything. And by anything, I mean any signal on any time, shorter term time frame. The bullish 1-bar rev strat. Here. Takes the inside bar to the downside, comes back through. As soon as the offer price is 1 cent above the inside bar that is being reversed or rev stratted, we take it, right? We take it right there. It's a momentum shift. Should just go. Place to stop 1 cent below the bid after we take the offer. This thing, as you can see in this very powerful one from last week, it should just go. They tried to take it down and fully rejected. The bearish 1-bar rev strat. Sell as soon as the bid price is 1 cent below the inside bar that is being reversed or rev stratted. Right here. Right? Since there's a momentum shift, right? Place one stop cent above the offer once we hit the bid, all right, down in here. What's very important also to remember about these one bar rev strats is that they will telegraph that they're happening. And what I mean by that is once this starts coming into here and we see it back into the inside bar, we can look for those combinations that's going to trigger this, right? Because we're pretty sure at this point they're reversing this thing, and especially if there's an additional actionable signal, all right? So if we go back to the bullish one bar ref strat, when it came down in here and comes back to the opening and is coming back here to take this bar, you can look for additional actionable signals to trigger to do that, right? Because we know that there's a high probability that's about to happen, especially if we have an additional actionable signal. Very important. A one bar rev strat is an immediate risk for a broadening formation since the rev strat is also a fractal broadening formation, right? And an outside bar, right? It's for this reason that we highly prefer those combinations I just discussed that would trigger the rev strat as opposed to taking the rev strat itself. Now we can still do it. You just need to understand once you're an outside bar that you have a fractal triangle. Therefore, it has to keep going. And upon exhaustion, it needs to get outside of that because an outside bar has shown an expansion of the range. And if we go into a sequence of contraction, as soon as that exhausts and it goes and starts to pull back inside, it's going to dry up and correct against us. Right? So knowing that that is a fractal broadening formation, we can take it. It just needs to keep going, period. Section 3, additional actionable signals. And we'll save that for the second video in this series. But for right now, we want to start beginning to understand what that execution looks like. When it does this, here's what we do. Here's where the stops go. Right? Here's why. And we'll get further into that when we return to the second video.